Hi, hello, good evening, friends. Welcome everyone to Super 25, India's largest retail traders online conference. I'm Ashok Devanampriya, the CEO of Traders Gurukul and also the host for today's program. It's a great pleasure to invite every one of you to Super 25 3.0 session number 3. I'm sure by the end of this program, you will have a good knowledge of the relative strength analysis topic. I would like to thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website. I would also like to thank and appreciate our title sponsor Espresso, the 𝐒𝐭𝐫𝐞𝐧𝐠𝐭 company, one of the leading stockbrokers in India with millions of investors as their customers. The speaker for today is Mr. Gaurav Bisa from Mumbai. I think Gaurav is speaking in our conference for the second time. He is the head of Trustline Securities. He's a professional with more than 10 years of experience in the field of technical analysis. He has been instrumental in setting up research desks in various organizations. He regularly appears on media channels as well. He is going to empower us today with his special topic, relative strength analysis. Dear Gaurav, on behalf of Traders Gurukul, Money Control Pro, Espresso, the 𝐒𝐭𝐫𝐞𝐧𝐠𝐭 company, I extend my warm welcome into our program as an elite speaker. Go ahead, my friend. The stage is yours.
Thank you, Ashok. Thank you, team Traders Gurukul, and a very thank you to all of you who have opted to listen to me. And I aspire to make this an interesting session. And today I have a interesting topic because you will be share a lot of strategies, you will be share a lot of studies, but one aspect is always on the back burner, which is how to select stocks. I can always look for harmonic patterns, I can look for Ichimoku, I can also look for Elliott waves and everything, right? But the crux of the matter is there are 1,000 stocks in NSE. How do we define a list, right? We cannot trade all the 1,000 stocks. How do we do that? So I will try to answer this question today, and I hope by the end of the session, all of you get to learn something interesting, and you will be able to start using this. It's a simple concept, so it's something that you can start using right away from today itself, or maybe from tomorrow. And at the end of the session, I'll be more than happy to answer your questions. So I'll start the presentation. The topic for today is relative strength analysis. Please don't get confused with RSI. Relative strength index is different. It's a derivative of price, how many up days in last 14 sessions, how many down days in last 14 sessions. That is the generic formula of RSI. It's an indicator. It is completely different. The relative strength analysis is completely different, right? It's more of a study. RSI is an indicator. Please don't get confused between the two. It is something which happens quite often. Whenever I teach my students, this is something that happens very often, and they get confused between RSI and relative strength analysis, RSA. So it is one of the simplest yet a very effective filtering mechanism. As I said, there are 1,000 stocks in Nifty. Which stocks should you be entering? We have limited capital. As a retail trader, we have limited options with us. Options, I don't mean stock options and index options, but the limited trades that we can take. We don't have humongous resource where we can run 50, 60 stocks at a time. It doesn't matter. That does not happen, right? This is something that I use very often, but this is not the only thing that I use. So you will be taught a lot of different subjects and topics, interesting topics in the entire marathon that we have for 1 month, but it is Gurukul. This is one thing that I do use. I keep some allocation, especially for these stocks. The idea is, if I find the Nifty is looking good, what are the sectors or what are the stocks that are looking stronger? It is all about associating with outperformers, right? We all know there are major mega cities. You have Bangalore, you have Mumbai, you have Delhi, Hyderabad, and some other. I may not name few, but there are so many others, right? Why we aspire to work in these places? Because there are a lot of opportunities. The work culture is good, the lifestyle is good, right? So we want to associate with them. We want to perform. Same way in stock markets, we don't want to get stuck just because my gut says you buy this, my liver says sell this, my pancreas are saying something. No, use your brains. What is the charts telling you? That is what is most important. It can be applied to all instruments. When I say instruments, it means it can be applied to index, your Nifty Bank Nifty. It can be applied to stocks. It can be applied to commodities. It can be applied to currencies. It can be applied to bonds as well, even Bitcoin for that matter. And it is applicable on all time frames. It is not as if it will work better in daily time frame. It will not work good in 15 minutes time frame. It is not that. First, you have to identify what kind of player you are. If you're an intraday player, you will be looking for 15 minutes to 1 hour time frame. If you're a swing trader, you'll look for maybe 4 hours and kind of time frame, daily charts time frame. If you're a longer term player, you will look for daily as well as weekly chart. If you are a significantly long term player for 5 years, then you will look for monthly charts. So you have to first define what kind of player you are. That is what is most important. If you might have heard about fundamental analysis, there is something called as top-down approach, wherein first the economy is studied, how the economy is doing. If we are feeling that, like in our case, we are saying we can be a 5 trillion economy, right? Maybe jokes apart and everything else, but let us assume that we are also feeling that we can be a 5 trillion economy. So that is the economic analysis. Then comes sectoral analysis, right? In fundamental analysis, that okay, if we are expecting that the economy may significantly rise from here. We have a very strong CAGR. Which sectors are looking most interesting, most lucrative? And then we look for company. That is a top-down approach. That is what is followed in relative strength analysis also, where we first talk about how we find Nifty, then we see which sectors vis-a-vis Nifty are looking strong or weak, and then we check among those sectors which are the stocks that are looking strong or weak. So what is RSA? It is just a benchmarking system. Like in our 10th standard, 12th standard, we scored certain percentage points. Maybe somebody scored 60, somebody scored 80, somebody scored 90, right? In Maharashtra and Mumbai board, we used to have 600 points, 600 marks, overall total. After that, we used to check how much we have got. So if we say, okay, I scored 450, so 450 divided by 600, so 75% is what I have scored. And that is the overall. But now we want to see which is the subject where I have scored. Maybe I have scored 19 mathematics. I've scored 17 Hindi, right? So what are we doing? We are just trying to find out which are our strong areas. When we look to our kids, we also do the same analysis. We try to guide them what career is better suited for you. You are not that very strong in science. It does not make sense for you to take a science field, opt for commerce, right? Or if somebody is very strong in science and mathematics, we say, okay, you go for physics, chemistry, maths. We have PCM in Mumbai. You can go and take that stream. So that is good for analysis, right? Where we are lacking, where we are strong, where we need to work more. The concept is same. The everyday concept that we are using the same concept here. It is also similar to if you want to buy a property. Okay, there are so many areas in let us say you want to buy a property in Mumbai. The first and foremost thing is you want to check which are the posh areas or which are the safe areas I want to settle with my family, right? I don't want to stay 50 kilometers away from the city center. So the first criteria, budget will be a criteria, but the most important aspect is going to be the quality of the area. If I find Mumbai is good, which are the areas which are looking very good in Mumbai? in suburbs or maybe South Bombay or wherever. Then comes what projects, because in let us say you identified one area. I have identified this area, it is looking very good. In that particular area, there can be 4 or 5 developers that are having ongoing projects or on the brink of finishing projects. So out of those 4 or 5, which are the flats that are looking best suited for you? We all do such kind of analysis throughout our lifespan. There are many such examples. We are doing the same, or we are applying the same logic, we are applying the same purpose in related strength analysis, where we want to find out the strongest sector in Nifty, in that strongest sector, which is the strongest stock. So the idea is to increase our probability. How much chance do I have of making money? At times we get stuck in breakouts. I bought and breakout, I got stuck, it failed. Whenever I buy stock, it comes down. So this can be one of those mechanisms where if you are seeing something similar in RSI charts, we'll see how the charts look like. I'll show you the website as well. If we use such methods, we have a higher chance. I'm not saying it is 100% foolproof. It will not work 100% of the times. Nothing works all the times. But we are looking for a higher probability. And same is what we are doing here. So, as I said, it can be applied on any time frame, which gives the facility to any and every kind of market participants. Some people might be intraday players, some might be swing traders, some might be investors. So it is applicable on everything. It is also used in cross asset analysis. If you want to compare one asset with another, retail might not be doing it, but if you follow anybody from the developed markets, you will see that not only the hedge funds or FIs, even a lot of normal traders also, they have exposure in multiple asset classes. They don't only do equity, they do commodities, currencies also. It is fast catching up in our nation as well. But this is what happens a lot of time. So what happens is that at times they want to allocate, play around with the allocation. How is equity looking compared to dollar, or how is equity looking to some particular commodity, maybe gold? So based on that, they will give allocation. They can increase or decrease the allocation based on that. So cross asset analysis to generate alpha is something that is being done in India also by a lot of mutual funds also at times. Not exactly cross asset, it's more about bonds and equity, only 2 asset classes, and AIFs also. The benchmark that we discussed earlier, the benchmark can either be an index or it can be a stock. When we talk about index, why are we using index? For example, Nifty. Why shall we use Nifty as benchmark? Nifty is combination of 50 stocks, and these 50 stocks are present in different sectors. You have metal names, pharma names, IT names, right? Financial, auto names, etc., etc. So majority of sectors are covered with the 50 set of stocks that are the constituent of Nifty 50 index, and that is why it is a very nice benchmarking tool. When we also trade, when you also trade, and you say I have made 10% in a year, right? Would you not want to have a benchmarking? If Nifty goes 15% and if you are making 10%, even though you have made money, but the performance has not been up to the mark. Same goes for mutual funds, right? When you want to put money in mutual funds, you check last 5 years how much has been the return, and then you compare against Nifty how has been the return. That is how you select the schemes. There are so many, there are 150 schemes. Even if you want to check large cap names, there are 10-15 mutual funds, and each and every mutual fund will have large cap scheme. So you have too many options, and if you want to filter out, I cannot put money in all the 15 MF schemes. I want to put money in few schemes, right? And that is why you compare the performance vis-a-vis index, Nifty 50. And that is how you